Hi guys, kind of just wanted to do a quick earnings preview for ViacomCBS. This is primarily driven by it's not having a lot to do over Christmas. Kind of ran out of a lot of podcasts, so I thought I'd try and make my own content really. I guess the idea for kind of having a Viacom earnings preview is just because I kind of found the analyst estimates to be significantly way off the mark. I think for Q4 2021, the consensus view is 0.39, which I guess is very low considering like how it performed last year. And with a high of 0.52 and a low of 0.29, they've kind of got a range around that. But even then, I think it still seems fairly off the mark. And I'm not really quite sure how these analysts have kind of come up with their numbers. I was kind of going to forecast my own and hopefully can compare and contrast really, see kind of variance between the two numbers really. I've kind of pulled out the trending schedule, which you can find off the website. Does a really good job of like kind of breaking down all of the all of the lines of business in an easy to kind of see the trend between the businesses, and hopefully using that we can kind of project out where we think we're going to end up for Q4 21. I guess here we've got the advertising revenue for the streaming business. We've got the subscription for the streaming business, and then the total for the streaming business. I guess for Q4 21, I've kind of tried to project my own figures. I think it was mentioned on a call on the Q3 earnings call that they kind of expect a 5 billion run rate on subscription on streaming revenue. So that would translate to a 1.25 billion for the quarter. I guess that was kind of their low end estimate, and I guess also given the new news that came out in the last couple of weeks about how Paramount Plus managed to have their best ever week in adding numbers of subscribers, potentially we could be overshooting that minimum marker by a decent chunk. So I've kind of only gone with 50 million above kind of what was expected, which I think quite easily would be able to beat. Just given the strength of performance, and I guess for a lot of the new content coming out, it could easily quite easily just be an underpick. Let's move on to like the advertising business. I guess Q4 generally tends to be one of the stronger quarters in terms of advertising. I guess a lot of that would be down to it being Christmas and stuff like that. Advertisers trying to get hold of as many sales as possible. Winter as well, winter in Northern Hemisphere, so I guess a lot more people will be watching TV and stuff like that. And that's kind of why Q4 tends to be quite strong. I guess I've kind of gone with the same number as 2020. Just be conservative. Like in 2019, we kind of saw 2.7 and then 2.6. I went with 2.6 again. Could quite easily beat that again. I can't. It's not the most toughest of comps. And I guess affiliate revenue that tends to be very stable, with a slight upward kind of growth trajectory, but very modest. So I've kind of essentially gone with flat for Q4 in 21. I guess streaming we've kind of spoke about already. What we'd expect like 1.3 billion, and then that would kind of constitute the kind of 5 billion, excess of 5 billion run rate that was mentioned on the earnings call. theatrical, which I guess is cinemas and stuff like that, makes up a small portion of the business. Obviously, as stuff starts to reopen, hopefully that should pick up again. But I guess, yeah, it's still very small. That doesn't really make a huge difference. I don't think it's the most profitable either, so probably won't make much difference to the bottom line, really. But I guess licensing, I think, is probably the most trickiest of areas on trying to predict, I guess, just because it tends to be fairly volatile, and that's kind of one of the areas that will be decreasing, I guess, given that a lot of the content that Viacom produce would be left for its own streaming platform rather than licensed out. But I guess also licensing does include licensing of all types of IP, so even if it was like a SpongeBob SquarePants kind of toy or socks or whatever, that would all come through on the licensing revenue. And yes, I guess stuff like IP is not really going to move about just because of the distribution channels. So yeah, I've gone with the lowest pick. We've seen all of the quarters. But yeah, I think that will be the most trickiest to predict and most volatile potentially. So yeah, that's kind of all the different lines of business. I guess for revenues, I've kind of got 7.3 in, which I think seems fairly reasonable given that the analyst projections are, 7.4. So we're kind of slightly under. So yeah, I think, it's more the expenses side, which doesn't seem to make sense from the analyst estimates. And so, yeah, you can kind of see here on the expenses, that's not really been a huge trend up. Maybe, very marginal. But I guess also on the earnings call mentioned, on the earnings call in Q3, it was mentioned that they're kind of expecting an extra 300 million of expenses. So I've kind of built that in, plus an extra 100 million over last quarter, which gets us to about 6 billion, which I think is fairly conservative. I can't imagine there being a huge ramp up to kind of see us come in much higher than that. But yeah, we'll find out, I guess. And then, so yeah, I guess that kind of translates to a 1.3 billion in gross profit. I guess there's also been some charges in restructuring, programming, and disposals. I guess there was nothing really mentioned on the earnings call about any significant one-off charges that could have a material impact. So that's kind of why I've left it 0. There could potentially be something small where it comes in at like minus 50 or 60 million. But I can't imagine anything too material turning up on the non-cash kind of charges. Obviously, we've got in depreciation, which I've kind of kept in line with last quarter at 95 million, which seems fairly sensible. But I guess that would translate to an operating profit of 1.2 billion. And then, so yeah, I guess I think the discontinued stuff kind of is based on the Simon & Schuster demerger or sell-off. So yeah, I wasn't quite sure exactly how that flows through, but I've kind of just put in 1 million as a kind of accrual almost. And then, so yeah, I guess I'll give this like our final... our final continuing for ViacomCBS at 1.1 billion. And then I guess to translate that into a EPS, we're on a total basis, we're at 1.85 discount out of a discontinued business, and we're at 1.7, which I guess seems kind of hugely different to the 0.4 as that the analysts expecting. I don't exactly know how they're getting to those kind of numbers, but yeah, it's like even if we did take off an extra billion for just an extra billion for fun really, we would still come in at the analyst estimate. So yeah, it kind of shows how big this disparity is really. And then, so yeah, that's kind of why I kind of wanted to make a video about it. It just seemed a bit crazy. So yeah, hopefully you guys found this video useful, and yeah, hopefully if I get some more time, I'll produce a few more of these, maybe for different companies or whatnot. And then, yeah, hopefully you found it useful, and I guess I'll see you in the next one. Thanks.